The start of the new week has been marked by uncertainty as to whether oil prices will be able to continue their uptrend. Notably, last week ended with the rumors in the US media about a disagreement between Saudi Arabia and the United Arab Emirates, which could well cause discord among OPEC member countries and a possible uncontrolled oil output. Of course, the content of this article in the Wall Street Journal is beneficial to Washington, which calls on Arab states to boost oil production in order to reduce energy prices. However, the Emirates denied rumors, adding that the cartel is not in a danger. According to the trading chart, Brent crude oil futures ended the previous week with a speculative hikes of about 4%. Despite this, the asset managed to overcome resistance and to hit the local one-week high. Now, traders are likely to face resistance at the 87 mark, which could lead to a decrease in the volume of long positions. Nevertheless, anxiety has gripped the oil market today. Beijing disappointed investors with a weak economic growth forecast for this year. China's outgoing Premier Li Keqiang announced at the annual National People's Congress on Sunday that the country would target gross domestic product expansion of around 5% for 2023, below market expectations. The economy began to recover after 3 years of severe restrictions. Last year, the Chinese economy grew by 3%, one of the slowest growth rates in nearly half a century. It fell well short of its 2022 gains. Also, traders surprised in a possible lower energy consumption in Western countries, which keep raising interest rates to combat high inflation. Furthermore, investors are waiting for a speech by Fed Chairman Jerome Powell in a congressional hearing on a Tuesday and Wednesday, hoping to receive any clues about the U.S. Central Bank's plans for further policy tightening 2 weeks before the Fed meeting. And the most experts are confident the regulator will lift the rate by 25 basis points. On the back of a soft approach, gold, highly sensitive to rising interest rates, gained upside momentum and broke through the resistance level of $1,845 last week. As a result, the volume of long positions increased. If the price consolidates above the $850 mark, the yellow metal will extend gains. From a technical point of view, the asset will recover from a sell-off in February. Meanwhile, the Russian currency remains steady against the dollar, and last week the Ministry of Finance finally announced its intention to reduce the sale of yuan in the coming months, and this news is likely to support the Russian currency. However, the trading activity is expected to be subdued this week as the International Women's Day is a public holiday in Russia on March 8. Technical analysis shows that traders are bullish on the dollar. If the price consolidates above the 76.50 mark, an additional buy signal will be generated. And that's all for now. We continue to learn developments on financial markets. Subscribe to the channel and follow news with us. See you soon.